Hey everyone, I hope everyone is doing well and had a good day. In this video, I will review the Emini 5-minute chart from Tuesday, June 3rd, 2025. And on the open here, well, we can see the close of yesterday. Looks like we have a rally. We're above the moving average. And then going into the day, it's a trading range open, trading range bar, bear bar, bull bar, lots of overlap, big up, big down, big up, big down. But you'll notice the bulls are able to keep the bars mostly above the moving average. And it looks like, aside from bar 2, every bar is closing above the moving average. And that's a subtle sign of strength for the bulls. Now we had higher highs, so it looks like 3 pushes up, 2 pushes down, so possible expanding triangle structure. And here, the bears are looking for this bull channel line to hold as resistance. And for the market to reverse back down from here, as it did here, as it did 3 times. So the bears are looking for this to reverse down, test the bear channel line, and the bulls are hoping we break above the bull channel line, as we did here, breakout, pullback, testing what was resistance, but we broke out far above all the bars to the left, came back down, testing what was resistance and what became support. And here we got a very strong bull breakout. Lots of consecutive bull bars. None of the bars are climactic, so they're fairly uniform in size, with bars closing near their highs. And one way to gauge the strength, you can use the 10+2 factors from Ali, or Al Brooks has a long list of strength factors for a bull breakout in this case. But to keep it simple while you're trading, you can simply ask yourself, how easy is it for a counter trend trader to make money? How easy has it been for a stop order bear to make money? Really all day, but especially up through here. Obviously, stop order bears are not making money at all. You sell below the doji, you're trapped. Sell below the bear bar, you're trapped. And we're not even triggering stop orders here. So even limit order bears are getting trapped. And that is a sign of a strong bull breakout. So strong breakout here, expect probably a measured move up. And along the way up here in this tight channel, I drew some breakout points. So this one's probably more clear. Bull breakout bar, breaking above the prior bar. The next 2 bars, the market tested this high, but there's a micro gap. So there's a gap or a space between the high of this bar and the low of these bars. That is a sign of strength, an open gap. A trader who sold above this bar, getting trapped on this bar, was not able to exit at break even. And on a smaller time frame, this micro double bottom is a double bottom bull flag. So we're in a bull trend, 1 reversal attempt, 2nd reversal attempt, and a 2nd trend resumption, which led to a breakout to a new high. And then it resets. So 2 bar trading range here, but minor, so it's a flag, a pullback in a bull trend. We break out, we come back and test that area of agreement, and it becomes support. The market rallies, we have another breakout above the prior bar, and we test the breakout point. What's the breakout point? Is it the high of the bar? Is it the low of the prior bar? Is it the close of the bar? Well, in real time, we never know exactly where the market is going to come back and test, but every bar's open, high, low, close is support and resistance. And here, if we think about just stop order traders, and we look at this reversal bar, it's a doji, it's a weak sell setup, very tight bull channel, strong bull trend, low probability short, but the stop order short is triggered and then it fails in a big way. And that creates support down here. So if the market comes back and tests this stop order price, this area, probably going to be buyers. And that's what we did here on the next bar or 2. And that led to another strong bull breakout to a new high, breakout above the prior bear bar. Traders are trapped on the breakout. We come back and test the breakout point, and then we rally again to a new high. This happens on repeat. Breakout, follow through to a new high, breakout point becomes support. It's a very tight bull channel. Now it's getting increasingly sideways here. Very tight, and still a tight channel here, but more two-sided. We're getting bear bars here, maybe a 7-bar tight trading range here. Still nothing to sell, but a warning that the upside might be limited, and this channel may evolve into a trading range, as it does most of the time. Most of the time, a bull channel should be thought of as a bear flag, because you get the bear breakout 75% of the time. And then here we have lower highs, higher lows, a contracting triangle, possible final flag, and we got the bear breakout. This one especially big, so nothing too strong here for the bears, but here, breakout, and then big follow through. Even though the bar closed far above its midpoint, this is a big distance, and it's probably going to get a second leg and some sort of reaction, meaning traders were trapped up here, and that's going to create resistance above. So after we get the trend line break, this being the trend, this being the trend line break, a resumption of the bull trend is less likely. What's more likely is a trading range. 40% of the time, we'll get a major trend reversal, so a bear trend line break, bear breakout, retest of the highs, and then reversal into a bear trend. But 60% of the time, more often, we get a trading range. So the channel evolves into a trading range. Bull leg in a trading range, bear leg in a trading range. The bear breakout and follow through, implied pullback, got a second leg, and the bull's got a strong reversal. Big, small, big, volatility, expansion, volatility, contraction, volatility, expansion. Usually the market pulls back and tests the pause bar, and if it doesn't, then this becomes, or if it just continues from here, this will become support, but often this will be support. So it's the same basic principle as over here. Breakout and the high of the prior bar becomes support. So bull breakout, the high of the prior bar is support. We can see the reaction. Now this became a very tight trading range. On a higher time frame, it's maybe more obvious. On the 5-minute chart, kind of a slow motion, big up, big down, big confusion trading range likely, and here we are basically in the middle of this trading range. So very tight range here, better not to trade, but you can still see the reaction to the support and resistance to the left. What happened here? We have a possible bull flag, pull back to the moving average. The first time the market tested the moving average in well over 20 bars here. But instead of rallying to a new high or testing the highs, we got a bear breakout and follow through in a big way. And that traps traders. And that means this price area, whether it's above this bar, the close of this bar, the open of the bear bar, this becomes resistance. And we can see that reaction here. And then same with this pause bar, the bull breakout, the prior bar's high becomes support. We can see the reaction here. We test it, we bounce, we test it again, we bounce, but we're in a very tight range between these support and resistance levels. And for today's day structure, I call today a bull trading range day, even though we had a very strong bull trend. And the reason I call it a trading range day is because on the open we had about an hour of trading range price action through here, maybe 2 or 2.5 hours of a strong rally, but I said the trading range began somewhere over here. If you sold here and used a wide stop, scaled in, you made money. The market came back and retested these prices. So if we just hid the bars to the left and only saw from here to the end of the day, you would call it a trading range. A couple legs up, a couple legs down, sideways, up and down. So I said there's about an hour of sideways here, 2.5 hours of trending, but then through here, there's about 4.5 hours of trading range price action. So the majority of the day was spent going more sideways, or channeling in what became a trading range. And that's why I would call today a bull trading range day. But we did open near the low and close well above the midpoint, but there is an upper tail on the bar. And because of the strong trend, some traders might call it a bull trend day, but for me, this was a bull trading range day. Alright, that's going to be it for today's review. Thanks everybody. I appreciate everybody for watching, and I hope everyone has a good night.